Hello and welcome, my dear students, to SDL Knowledge Hub. I'm your tutor, Shehan Dias. Today, we will be discussing in accounting about the accounting equation. So, if you haven't subscribed to our channel, please do subscribe. So, let's move on to the today's lesson. Accounting equation. So, what do you mean by the accounting equation? This shows the assets of the business and the relationship showing the ownership of those assets. So this is done through an equation which is called the accounting equation. So if all the assets are funded or financed by the owner, then the assets will equal to equity, which is the amount that belongs to the owner. For example, if Ranga started a business by investing 500,000 in cash, therefore the accounting equation will show as assets cash 500,000, equity capital 500,000, which is the amount invested by Ranga. When business starts to grow, the resources invested by the owner will not be adequate. So, to obtain additional resources, the business would have to get funding from external parties. So, that means they would have to borrow money to obtain the needed resources, which creates liabilities. Therefore, the accounting equation will read as assets equals liabilities plus equity, which means how the assets are funded of the organization, part by third parties, which are liabilities, and part by the owners of the business, which are equity. Impact of business transactions on the accounting equation. So now we know the accounting equation assets equals liabilities plus equity. So let's look at transactions, how it will affect the accounting equation. Looking at an example. Someone started a business by investing 500,000 cash in the business. He used 200,000 of the cash to buy furniture for the business. He also bought stock worth 250,000 for the business on credit. He obtained a bank loan of 300,000 to further use in the business. So, based on the information given, first what we will do is look at the transactions of this information individually. The first one is investing 500,000 cash in the business. Number 2, buying furniture for the business for 200,000. And number 3, buying stock worth 250,000 on credit. And the last one, obtaining a bank loan for 300,000. Now, we have separated the four different transactions. So now we look at the impact of them on the accounting equation, which is assets equals liabilities plus equity. So if you look at the first transaction, investing 500,000 cash in the business, cash, an asset, will increase by 500,000. Then, since the investment is done by the owner, so equity, under equity, capital will increase by 500,000. Number 2, buying furniture for the business 200,000. Since this is bought by cash, cash will reduce 200,000 and another asset, furniture, will increase by 200,000. So in the accounting equation, this transaction is recorded in the same side, whereas one asset increases and another asset decreases. Number 3, buying stock worth 250,000 on credit. So stock, an asset, will increase by 250,000. Then since this is bought on credit, this will create creditors, which is a liability. So creditors 250,000. Finally, obtain a bank loan for 300,000. So by getting a bank loan, the business will get cash for 300,000. So bank loan, the business organization needs to pay back, which is a liability. So under liabilities, bank loan 300,000. So I hope this is clear for you. The recording of transactions in assets, liabilities and equity, the accounting equation. Let's look at a question regarding accounting equation. We have 10 transactions to be recorded in the accounting equation. So when recording in the accounting equation, you have to record them for assets under different types of assets and liability under bank loan. So let's look at the recording of these transactions. Invested 800,000 as capital, that is cash 800,000 plus and equity 800,000 plus. Obtain a bank loan of 300,000, that will increase cash by 300,000 and the bank loan 300,000. Deposited 200,000 in the fixed deposit account, which will reduce cash by 200,000 and another asset fixed deposit will increase by 200,000. Earn a cash income of 150,000 from computer repairs. So cash will increase by 150,000 and income, which is under equity, will increase by 150,000. Paid 30,000 as monthly rent for the business, which means cash will reduce by 30,000 and equity will also reduce as this is an expense. So equity reduced by 30,000. Then Pandal withdrew 30,000 from the business for his private use. So that means cash will reduce by 30,000 and equity will reduce by 30,000. Purchase equipment for 150,000. So equipment asset will increase by 150,000 and another asset cash will reduce by 150,000. Pandula paid rupees 5,000 telephone bill, so cash will reduce by 5,000 and equity expenses, due to expenses, equity will reduce by 5,000. Pandula invested an additional capital of 150,000, so that means cash will increase by 150,000 and equity will also increase by 150,000. Settled 50,000 of the bank loan, so cash will reduce by 50,000 and bank loan, because being settled, will reduce by 50,000. Now we'll look at a full question regarding the accounting equation. So you have been given opening assets and liabilities and the transactions for the first week of April. Based on this information, we have been asked to do the following: find the opening equity, record the transactions in the accounting equation, and find the closing balance in each account. So let's see how this question can be tackled. Using the accounting equation, we can find the opening equity. So the accounting equation is assets equals liabilities plus equity. So rearrange that, we get equity equals assets minus liabilities. So you put the values for the assets and also for the liabilities, and then you will get the answer opening equity as 500,000. Then number 2, you have to record the transactions in the accounting equation. So here again, the elements in the equation again segregated into different accounts. For assets, furniture, stock, debtors and cash. For liabilities, bank loan and creditors. So under these we have to record the transactions. So first what you need to do is record the opening balances. Furniture 500,000, stock 150,000, debtors 200,000, cash 150,000. Based on early calculation, equity 500,000, bank loan 400,000 and creditors 100,000. So now we can record individual transactions. Purchase stock 400,000 on cash. So then stock increased by 100,000, cash reduced by 100,000. Then this stock was sold for 125,000 on cash. Then stock will reduce by 100,000, cash will increase by 125,000, and the difference between the two is income or profit. Here equity will increase by 25,000. Then paid salaries for a paid bank loan for 50,000. So cash will reduce by 50,000 and the bank loan will reduce by 50,000. Then paid salaries for 50,000. So cash will reduce by 50,000 and expenses which will reduce equity. So equity reduces by 50,000. Then the owner did a stock drawing took for his personal use. So stocks will reduce by 50,000 and owner's amount, that is equity, will reduce by 15,000 because of the drawing. Then furniture purchased for 40,000 office use. So furniture will increase by 40,000 and cash will reduce by 40,000. Then the stock has been purchased on credit basis. So stock will increase by 150,000 and creditors will also increase by 150,000. Then a sale made for 100,000 on credit basis which costed 50,000. So the stock will reduce by 50,000 based on the cost, and since done on credit basis, debtors will increase by 100,000. So the difference will be the equity 50,000. Then debtors paid money to the value of 80,000. So debtors will reduce by 80,000 and cash will increase by 80,000. Then finally, paid creditors for 50,000. So cash will reduce by 50,000 and creditors will also reduce by 50,000. So now we have recorded all the transactions in the accounting equation. The last thing we have to do is find the closing balances for individual accounts. So what we need to do is add down for each individual account. For example, furniture 500,000 plus 40,000, 540,000. So likewise you do for the rest of the individual accounts and you get the closing balances. Transactions that affect the change in equity. Now we look at what kind of transactions will either increase or decrease the value of equity. First one, introduction of additional capital. So additional capital will increase the equity. Then drawings is taking either goods or cash from the business. So this will reduce equity. Then income will increase equity while expenses will reduce equity. Now you have been given the following details and you have been asked to find the equity end of the period. So capital, opening capital is 550,000, income for the year is 200,000, expense for the year is 150,000. Then there have been infusion of additional capital 250,000 and the drawings had been made by the owner 50,000. So need to find the equity end of the period. So using the knowledge of which constitutes to increase and decrease, so we can add and subtract from the opening equity balance. So opening equity balance capital is 550,000, so you add 200,000 income and add additional capital 250,000, then deduct the ones that will reduce equity, drawings 50,000 and expenses 150,000. So we end up with the final balance of equity of 800,000. Here you have been given transactions recorded in the accounting equation. So then we are being asked to describe each of the transaction. And it has also said the owner has not taken any cash drawings during the month. So looking at this, so we need to describe each one of the transactions. So let's see how this has been done. The first transaction recorded is cash 500,000 plus an equity 500,000. So that transaction is, since equity has increased, that is additional capital has been invested. So first transaction is additional capital 500,000 invested in cash. Then the next transaction, cash increases by 200,000 and bank loan 200,000. So then you would see this bank loan has been obtained. So the transaction is bank loan received for 200,000. Then we have three items: stock reduced by 90,000, debtors by 150,000 increase, and equity increased by 60,000. So this is regarding a sale on credit because debtors have increased. So that means a sale has been made on credit for 150,000 which costed 90,000. So we can say as the transaction, a stock worth 90,000 was sold on credit for 150,000. So therefore, difference you get equity as 60. Then the next transaction, stock increased by 150,000 and creditors increased by 150,000. So since there are creditors, so that means this is again on credit basis, but this time a purchase. So we can say as the transaction, stock bought worth 150,000 bought on credit. Then the next transaction, cash reduces by 50,000 and equity reduces by 50,000. As you know, there are only two reasons why equity will reduce, either due to drawings or due to expenses. As we have been told, there had been no drawings, so then because of expenses, equity should have reduced. So that means the transaction is paid expenses for 50,000. Then the next transaction, stock has been reduced by 10,000 and equity has reduced by 10,000. So that means this is not a sale, but the stock has reduced. That means we can say due to stock damage. So the transaction is stock damaged for 10,000. So that will be set off as an expense from the equity as 10,000. Then 400,000 plus for motor vehicle and 400,000 creditors. So since creditors are appearing, this is again a credit transaction. So we can say bought a motor vehicle on credit for 400,000. Then debtors have reduced by 80,000 and cash has increased by 80,000. That means debtors had paid money. So received payment from debtors 80,000. Then cash reduced by 100,000 and creditors reduced by 100,000. That means the business has settled its creditors. So we can say settle creditors for 100,000. And finally, cash reduced by 40,000, equity reduced by 5,000, and bank loan reduced by 35,000. So there's an expense part, and the bank loan also has been reduced. So this happens due to payment of installment, which includes the bank loan capital portion plus the interest. So interest is shown under equity. So that means paid bank loan installment of 40,000, which included 5,000 as interest. The rest will be 35,000 bank loan. So hope you got a good understanding about the accounting equation lesson. So if you haven't subscribed us yet, please do subscribe. So until we meet again with another similar video, bye for now.